Hey, what's up everybody? This is CryptoQuantamental, and today I'm going to teach you guys how to trade divergences. It is a popular topic in the trading community. It can be pretty risky, but it can also be pretty fruitful if you know what you're doing. So today I'm going to talk about exactly how you can trade those divergences, and then I'm going to show you guys my tool, or talk about my tool that'll tell you which cryptocurrencies are currently showing divergences. Let's jump right in. Alright, so a divergence is a potential leading indicator, which is great because you want to be ahead of the curve. Now, there's a couple of different types of divergences. One is called regular and one is called hidden, and we'll get into both. I believe hidden divergences are a bit better because the hit rate is a little bit higher, but regular divergences could be a bit more powerful when they do work. Now, in order to spot divergences, you need to look at highs and lows over a period of time. Now, the period of time could be whatever type of frequency you want. Some people are very short-term traders, so they might be looking at like 15-minute candles or 5-minute candles, which is pretty short. Some be looking more at daily candles. The model I'll show you or talk about, I look at daily candles, daily closes. So that's a little bit different than some other people, but you can do it however you like, whatever suits your trading style. Now, the key about a divergence is you're looking at both the price action as well as an indicator or an oscillator. You're comparing them. Now, what a divergence, what it means really is the price is behaving a little bit differently than the oscillator or the indicator. So one is, say, making a lower low and one is making a higher low. They're showing two different things, and that's what a divergence could be. Now, like I just mentioned, you compare price versus an indicator, and you might come up with, say, a bullish regular divergence. That's great, but I like to see a bullish divergence or bullish regular divergence comparing two indicators. So not just looking at price versus one, looking at price versus two indicators, and that gives me added confirmation that the divergence is actually there. And some indicators will look at MACD, RSI, on balance, volume. Now, like I just mentioned, it could be bullish or bearish. So you really have four types of divergences. You have a regular bullish or bearish, then you have hidden bullish or bearish. So what is a regular divergence? Now, a regular divergence is a signal that might spot a potential price reversal. So a bullish regular divergence is when the price makes a lower low and the indicator, like I mentioned before, MACD, OBV, RSI, or whatever you'd like, is making a higher low. Now, I like to have two, and this is what signal a positive potential reversal. So you're having negative price movement because you're making a lower low, but the indicator is turning positive as it's making a higher low. So this is actually a signal that you could potentially see a reversal. I'll back up a page, and you could see where the chart to the right, you have a classic or a regular divergence. Here, this is a bullish regular divergence. The price is making lower lows, and the oscillator is making higher lows in its potential reversal entry. Where a bearish regular divergence is the price making a higher high, and the indicator is making a lower high. So the positive price momentum here is going to be slowing as the indicator turns negative. This is potential for a negative reversal. What about a hidden divergence? Now here, hidden divergence is essentially a continuation signal. It's looking to confirm a recent momentum, what that means for me is I prefer hidden divergences over regular because momentum is very powerful. This is just a signal to confirm momentum, and what I've seen is hidden divergences actually play out more often than regular divergences. But when regulars do hit, they tend to hit a home run, so to speak. So bullish hidden divergence is is when the price makes a higher low and the indicator is making a lower low. So the price is continuing to go up and the indicator is cooling off. So think about, let's use an example like RSI. So this means price is going up, but the crypto or the stock, whatever it is actually not getting close to being overbought, which is a good sign that momentum may continue. And bearish is the opposite. Price is making a lower high and the indicator is making a higher high. So in this case, RSI would be, it's actually getting closer to being overbought. And, price is going down. So that's certainly not a good thing. That it might continue to go down as well. So it's a continuation signal of momentum. So here are some rules I kind of put together. I like to use as an additional tool, as a confirmation. Here you could see the example here of Oxford Industries. The price made a lower low, where the oscillator here made a higher low. So I like to use multiple indicators. Now it's also possible for both regular and hidden divergences to cancel out. You can have say a bullish regular and a bearish hidden. Generally what that means for me is I just literally cancel them out, and to me that's no signal. I don't like to use divergences as my only reason to enter a trade. Really short horizons could be pretty unreliable in my opinion. I think with divergence especially with regular divergences, you require strict risk management because you're trying to catch an inflection point or reversal that can go against you pretty quick. Now I mentioned this before, but hidden divergences are more reliable because they're confirming momentum, so higher hit rate, but a lower magnitude of winning, where regular divergences are the opposite. It's a lower hit rate, can have a bigger move. So which cryptos are showing a divergence? Check out my model, CQF model. I post it every single day. Follow me on Twitter at CryptoQF to see it. So all the liquid cryptocurrencies, I show whether they have a regular divergence, regular bullish or bearish, or a hidden divergence, bullish or bearish, as well as overbought, oversold. And I rank all the liquid coins as well. So there's about 170 of them I rank every single day. Now, my model is driven for scalability, so if you're a human and you check the chart of a particular coin, you might be a bit more precise than what a divergence would look like from a pure data standpoint. Now, I'm looking at daily closes over the past couple of weeks, and if you have a different trading strategy, like look at shorter term, then you definitely would have to check out the chart as well. Okay, and now I'm going to give you guys a clue for the CQF challenge. Now, if you guys do not know, I snuck a Bitcoin into my YouTube channel across a bunch of videos, across just my channel broadly, and it's up to you to find it. Find the secret passphrase, crack the code, and you can get the wallet, and you can take the Bitcoin. It's actually right now 0.97 Bitcoins. Now, with the challenge itself, I also have a bunch of giveaways to get people to participate, because I know not everybody is going to want to crack the code. So by participating, you can follow me, you can retweet me, you can watch my videos, you can comment on my videos. There's lots of ways to boost your winning. And you can win up to 25% of the wallet. Now, there's 9 more giveaways. We already had one, and the person that won 3% of the wallet, so he got 0.03 Bitcoins. So here is another clue for the CQF challenge. Now, I mentioned here 1 Bitcoin is treasure. It's actually 0.97 now. And here is the clue. Learning this will be critical in completing the challenge. All right, guys, and there's the image. All right, well, that wraps up this video on divergences. Hopefully this helps you a little bit. Again, just use it as a confirmation signal. Hidden is pretty good, especially when confirming momentum. Regular is really good for reversals, but the hit rate's a bit lower. And definitely use multiple indicators to confirm that what you are seeing, whether with your eyes, with your data, is actually there. Thanks for joining me, and this is Crypto Quantamental, and take care. Thanks.